Welcome to Business Budget Model. In this tutorial, we're dealing with the budget, and in specific, we are going to be focusing on the balance sheet and the cash flow elements of the budget. To access the balance sheet and cash flow, we need to select the budget sheet, which we can do by selecting this macro button budget, alternatively clicking on the sheet down here below to go directly there. By default, we will land on this section of the budget sheet once selected, which is the income statement side. Once again, important to highlight the scenario that we're working with and the fact that the budget is in balance. To get to the balance sheet, year one, we would simply click on the balance sheet button at the top and we will arrive there. It's important to know that in order for your budget to start, we needed an opening balance sheet to take on, which was described in a separate tutorial earlier on. And these, in column B, these cells shaded in blue are the values that you captured in that particular opening take on balance sheet. They brought forward and then they obviously adjust as they're going across by the months. As covered in the income statement sheet, we've got row and column groupings at the top. I'm not going to go into any of that detail, where we can either collapse or expand the views that we're currently looking at. The balance sheet obviously is governed by all the different accounts and income statement and schedules, the asset and liability schedules from all over. It is simply calculated. There's nothing that you would have to manually enter for the budget. And as stated earlier on, it should always be in balance. In other words, cell B3 should always be displayed as a blank white cell. So there's nothing too detailed we need to go in here other than being able to look at the balance sheet, equities and liabilities, current and current assets, long-term liabilities, etc., etc. Once again, if you're not using any of these particular rows from your chart of accounts, you can hide them by simply pressing 3 keys simultaneously, which to hide would be Control, Shift and H. A pop-up box will ask you to enter the row numbers with a colon in between, which you'd like to hide. So let's say, for example, we wanted to hide from row 338 to 343. We would simply type in 338 colon to 343, and we would select OK. So as you can see, it allows you to clean up your balance sheet so that from a visibility and a viewing point of view, it's far more neat and it doesn't have unnecessary rows there that don't need to be there. If you want to unhide any rows, the process is identical, except you press Control, Shift and U for unhide, and then the process is exactly the same. So key in the row numbers, 338 to 343. Okay, and then they'll reappear. Now as far as the cash flow is concerned, there's probably a great deal of probability that you will want to hide a number of these rows that you're not using. And we start off at the top with the cash flow, which starts off, and it starts with what it determines as cash sales. Remember, cash sales would be whatever percentage of your debtors that you said pay within 0 days, so between 0 and 30 days. So it assumes all those would be paid in that month. Then the accounts receivable, which we'll go into more detail when we do the various schedules, is calculated with all the movement. Accounts payable, remember it was broken up into 3 different types because all of them had different potential payment splits of how you paid them. So we've got trade supplies, OPEX supplies and CAPEX supplies. It'll calculate either your VAT or GST payments, and then it would subtotal it as cash generated from trading operations. Then from your fixed assets and all your balance sheet accounts, it picks up all the movement, paid or received, for all of them. Now, in a number of instances, you may want to hide these; they may not be applicable. And remember, Control-Shift-H and Control-Shift-U to hide and unhide. And so it goes through calculating all of it. So it goes through quite a process to calculate what your net cash flow movement is. So you've got your net cash generated, you've got the opening balance from your opening balance take on, but in this instance, we've got cash generated, we've got the opening balance, and that opening balance is then calculated to a closing balance. That closing balance is then carried forward to the next month, and so the increments happen. So it generates your cash movement. If you wanted to just see this on an annual basis, remember the row and column groupings, then just simply select one for your annual, and then you can see the totals of the cash movement just year by year from opening to closing balance as to where the final balances ended up. Remember, these balances are then projected in the financial dashboard on that graph at the bottom, which shows your monthly cash flow balances, which is an incredibly important element of the success of your business is obviously your cash flow. So that about wraps up what we need to cover on the balance sheet and cash flow calculations. Once again, we can, when complete, we can just go back to the navigation page or select any other page for that matter.